The markets in just a bit. We have the management of Asian Paints reported a weak quarter in their weak performance in their fourth quarter. The margin contracted, revenue, EBITDA both below expectations, even as volumes grew by about 10%. We caught up with Amit Syngle, the MD and CEO of Asian Paints, to discuss about the quarter gone by, but more importantly, the weakness in the consumer sentiment and the outlook for this year.
Overall, when we look at quarter four, we saw various things happening in the market. I think initially what we have seen is that the rural markets were responding a little bit better in terms of the overall thing as relative to the previous quarters to that extent. The B2B business was also doing well in terms of what we see in terms of both the builder segment, the construction segment, as well as the institutional segment in terms of what was happening. And the third is that we saw good kind of imperative coming from the industrial market, which is the auto sales and the protective sales market, in terms of which were doing quite well. And I thought we saw a little bit of a slowdown happening in March because of the elections coming to that extent, which put up a slowdown on all these parameters which I have spoken of. But in general, I think the overall demand was moderate to that extent, notwithstanding that I think we stood to our promise of a 10% volume growth in terms of what we have delivered to that extent. The value has been obviously a little bit down, one, because of the product mix in terms of what we have delivered, second, because of the price decreases which we have taken of almost about 3.6% to that extent. And I think these both factors brought the value down and a little bit in terms of affecting the margins as well.
Well, you did speak about demand being affected due to elections, etc. We don't have the numbers of all the other companies, but another listed player that reported numbers, they said double digits decorative volume growth as well. What is your sense of the growth that you've posted versus the industry in the fourth quarter?
I think we would say that the volume growth would be definitely, much higher than the industry in terms of what we would have posted to that extent. The value growth might be a little bit different depending on how the percentage share of the industrial sales comes for various competitors to that extent, because the industrial sales has done much better than overall decorative to that extent. But otherwise, I think overall, from a volume perspective, we are pretty comfortable.
We speak about volume growth, and we've been speaking about it in the past as well. You've guided for the difference between volume and value to be around 5 to 6% in FY25. So from that standpoint, do you think now it becomes not a very important metric from a street standpoint to look at the volumes itself? Because that gives a very different picture versus what's reported in the profit and loss statement.
So overall, as we see, as we kind of go ahead, given the imperative of saying that there have been some decreases which have been taken, also the fact that today we must kind of take into account that the economy segment is the largest market in terms of the decorative paint industry, in terms of what it is there. And if there are imperatives happening there, the volume growth would be very, very critical to get in terms of really looking at your shares as we kind of go forward to that extent. But having said that, I think the premium and the luxury segments are as important. The luxury segment is also growing at a good pitch. But I think given the overall contribution both the premium and the luxury segment has, and the fact that you want to kind of outstrip the growth in terms of some sectors of the economy, I think volume would remain as a very, very big parameter as we kind of go ahead. Also, the fact that rural is expected to bounce back a little bit more in terms of 24-25. Therefore, I think the focus in terms of where companies are registering the overall volume growth would be a very, very important parameter.
We see you have increased your ad spends during this quarter, the Virat Kohli launch for Neo Bharat, the economy segment which you've been talking about right now. I just wanted your thoughts on margins. You've given a band of 18 to 20% for this year. Raw material prices, they've more or less bottomed out from what we gather from the industry so far. What are the levers for margin expansion going forward, or is there a risk from a downside standpoint? Because, then you will have all the fun and gains happening in the second half of this year with competitors coming in.
So overall, as we look at it, when we look at even the economy segment, we talk of a certain gross margins in terms of our products which are there to that extent. And that is something which is a core focus so that we don't have any margin dilution which is happening on the overall frame, even if the economy sector grows at a slightly higher rate to that extent. But if you look at the financial year 24, we are still at the EBITDA margins of almost about 21% plus in terms of what we have delivered, which is much above the guidance margins in terms of what is there to that extent. And I think what we are positive that as we kind of go ahead in the year, given the mix in terms of what we intend to sell, given the focus we want to bring even on the premium and the luxury segment apart from the economy, I think we should be well above the guidance in terms of what we have kind of given for the year. And I think that's been the focus, and the gross margins have also been good to that extent. I don't see any big kind of inflation happening in the raw material prices, at least in the Q1, as we see it to that extent. And therefore, I think we are pretty positive that we should stay above the guidance.
And you are, positive about staying above the guidance, factoring in all the fun and games that will happen in the second half, right?
Absolutely. I think fun and games are part of the overall games we play to that extent. And I think we are really up to it in terms of what we want to do and what is the strategy ahead.
What about, the home care segment? That's been a bit of a pain point. Is that conscious, or is it something that you are doing to, increase it going forward, especially the bath vertical?
So overall, I've been always saying that when you look at the home decor segment, it comprises of many other categories as well. If you look at the lighting category, you look at the doors and windows, you look at the fabric category, all these categories have grown in double digits, both in Q4 as well as in the whole financial year to that extent. So the home decor category is not only about kitchen and baths to that extent, and therefore the other categories are literally fueling the growth at our Beautiful Home stores, in terms of which are now 16 number and spread across the country to that extent. But having said that, kitchen and bath has been definitely a disappointment in the last year in terms of what has been there. We have not been able to kind of really galvanize growth there, especially bath has been much slower in the market. And we're taking now corrective actions in terms of now bringing both bath and kitchen into the Asian Paints Beautiful Homes umbrella very strongly. And we feel that given the brand, given the equity, given the servicing in terms of what we can put into place, we should see a new phase of kitchen and bath going this year to that extent, so that it kind of propels the overall home decor category along with the other categories.
I have to ask you this, Amit. Usually we speak about competition, a lot has been spoken about it, so let's not speak about everything that is out there in the market so far. What's concerning from the perspective of those who hold Asian Paints shares is that, from the peak it's down about 25%. And this morning I was reading through swathes of all the brokerage notes that have come by. A lot of them have trimmed their EPS estimates, but more importantly, some of them are calling this the competitive equilibrium in the paints business being likely broken. And all of them have actually reduced the multiple at which Asian Paints would trade earlier in the market. What do you think has given?
So, as I see it, I think, the current way the quarter has gone, the value numbers, the margins, and I think people are getting definitely influenced by that in terms of what is there. I feel that time will only tell in terms of saying that I don't think so it is any competitive pressures which is kind of really looking at doing stuff in terms of what's happening. We are very clear about our strategy, which is in terms of propelling the brand, putting money behind the brand, looking at supply chain measures in terms of what we want to take, and building a relationship with the network and expanding the distribution area, putting innovation in terms of newer categories, building new categories, and so on and so forth. So I would say that I think some of these reactions are obviously coming given the behest of the quarter in terms of what's coming and the overall macro situation with competition coming in and so on and so forth. But I think going ahead, we are confident that I think we should be able to change the viewpoint as we see the further quarters coming in.
Okay, confident of beating that 18 to 20% margin guidance in FY25 as well. That's a very confident Asian Paints talking to you, Mangalam. But as of now, the stock is doing well. We need to take a short break. But it's now time to also shine a spotlight on the backbone of our economy, a celebration of your impact on India's success story. CNBC-TV18 and HSBC India proudly present India's biggest SME awards platform, honoring the small and medium enterprises that drive our nation's growth. Nominations are open now, and we invite you to become an SME champion. Your dreams power India's progress, and it's time to celebrate them. Scan the QR code and be a part of this monumental recognition at the SME Champion Awards. It's not just a platform, but an opportunity for you to step into the limelight.